Greetings.
Good morning.
Good morning. Greetings and gratitude to everyone who has taken up time for us and joined today. It is again one of the links in the chain of lectures that the Department of Economics feels proud in organizing from
तुम सुनाई नहीं दे रही हो। रश्मि सुनाई नहीं दे रही हो।
I am not audible. Now I am audible.
तुम गायब
So
हो
I
गई।
am starting it again. Okay. I am starting it again. Sorry for the technical default. Good morning, everyone. Greetings and gratitude to everyone who has taken out time for us and joined today. It is again one of the links in the chain of lectures that the Department of Economics feels proud in organizing from time to time. Today, we have come up with an international webinar on the topic Impact of COVID-19 on Financial Services. Am I audible to you?
Yes.
Okay. I, Rashmi Akhori, Head Department of Economics, is the host and moderator of today's international webinar. Dr. Mridula Kumari, Department of Economics, is the observer of this webinar. I'd like to make few basic announcements before proceeding on. Participants on Zoom are requested to kindly mute their audio and turn off their video for the seamless progression of the event during the session. You can post your queries during the lecture session in the chat box. Participants watching live stream on YouTube can post their questions in the YouTube live chat. Feedback link will be posted in the chat box towards the end of the session on both the platforms. Please be patient and do not inquire about the feedback during the session. Thank you all. Honorable Principal and Patron, Professor Tapan Kumar Shandele, highly esteemed resource person, dignitaries from colleges and universities across the world, respected faculty members and students. I'm sure all of us would agree that these past months have been very critical, and we are trying our best to find a solution to this through various webinars and seminars conducted to litigate this global health crisis. But we know we will ride through this, adapt ourselves, and come out stronger. COVID-19 has already made a significant impact on the financial market globally. And as it continues to spread, we need to focus our attention on the financial and business aspects to give relief and find a solution to the serious challenges faced. Nearly 162 countries are steadily going into lockdown, and businesses across the globe are operating in fear of an impending collapse of global financial markets. This situation, clubbed with sluggish economic growth in the previous year, especially in India, is leading to extremely volatile market conditions. Whatever the new normal is expected to be, the sectors which are getting affected the most and which will continue to be severely impacted would be sectors which touch people's life on a daily and regular basis. One such sector would be the financial service sector, which primarily includes banking companies, non-banking financial services, and insurance industry. There are, of course, pressure on all fronts be it inadequate digital maturity, existing infrastructure, staff shortages, etc. But we have to craft a strategic response, short and medium terms, to sail through this crisis. I hope it doesn't seem a flatter when time and again I praise our principal, Professor Tapan Kumar Shandil, for his exceptional qualities of a leader, an administrator, an academician, a person who stands with us in all our projects from conception to its final completion. Thank you, sir. We feel humbled to have you at the altar of our institution. I now invite our respected principal, Professor Tapan Kumar Shandil, to inaugurate the session with his address. Welcome, sir.
Thank you, Rasmiji. First of all, I am thankful to Kumar Jyoti. Today, he is with me on this international webinar, and he is going to deliver a lecture on good topic, that is the impact of COVID-19 on financial services. Every man know about the effects of coronavirus on coronavirus infection were first reported in China, and a few months after that, it becomes a global pandemic. This pandemic was completely changed the system of the globalized world, which are strongly connected to each other. As part of the effort of control the outbreak of the virus, government of different countries put restrictions on movement and social interactions, causing more than 1/3 of the world's population of 7.8 billion is forced to stay in their homes. In way, the foundation of the Indian economy may be agriculture, but in the present time, the middle class and lower middle class are the biggest hand behind the growth in the Indian economy. This way, India is defined as a middle income group country. So the global problem is affected into two segments. One is a health crisis and second is a economic crisis. The global health crisis is intensifying due to corona virus pandemic, and lockdown has become a new rule for many people, and now the perception is fast becoming that by the time of coronavirus will end, appearances will change forever. Today, there is a general consensus that for the next 1.5 India will be strongly with the immediate.
Sir, your voice
Okay.
is not audible.
Rasmiji.
Yes, now you are audible.
Okay.
Yes.
Today, there is a general consensus that the next 1.5 or 2 years, the whole of India will, in some way, possibly was struggling with the immediate threat of COVID-19, and even after that, the reconstruction and its permanent effect will undoubtedly be left for many years. Borders are closed, airports, hospitals, and businesses are closed, and educational institutions are closed. And these unprecedented measures are breaking the social fabric of some societies and disturbing many economic, resulting in large-scale loss of people's job and increasing shadow of hunger on the border scale. Currently, many people do not know how this crisis will unfold. Today's top priority to save life. Our Prime Minister also several times advocated about the priority to save life and this objective of saving lives in future success. But to succeed in the future, the India must plan for it. We understand the context of coronavirus. But today, our speaker is going to deliver on a burning issues on financial services. Every man know that now when we talk about stress on banking and financial sectors and parameters, they are also today in this COVID-19 suffering. The government has already taken into action on the
Sir, you are not audible.
सर आप अनम्यूट कीजिए अपने को.
Unmute नहीं है, उनका नेट प्रॉब्लम है.
part. Okay.
Yes.
Okay.
प्रॉब्लम है.
Okay, madam.
Yes.
Yes, sir.
So, when it will resume the operation, one has to pay it. One will be classified as NPA, non-performing asset, and he will be debarred from getting any loan and have to depend on informal sector like money lenders, where the rate of interest will be 2 and 3% per month. So this has created a lot of exposure in terms of banks, exposure to stress industries in MSMEs occur. There is a rise to consumer loans default because of high unemployment and household leverage. Stress on bank impact credit growth for both public and private banks. There will be a loss and both come under some category. But this will create more demand for capital market and financial parameters. The stock market has fallen 30% since pandemic started spreading in the West. A sharp depression of rupee against the dollar, worsened trade deficit as export disruption of GDP is low, causing bond yield and make borrowing more expensive, thereby reducing bank margins. Capital flow is also affected by the COVID-19. So that just our speaker, Mr. Jyoti, is going to detail on these issues today, financial services, because he's an expert of financial services. So that, he has given some points to remove of this problem. We can always see light at the end of tunnel. All the previous pandemic has given good opportunity to come back. This also will pass through, and this is just a facing period. Now, let us categorize the industries as winner and loser. Airlines is one of the industries who is running in loss. There has not been a single airline expert, Air India, which is government, and one is under operation. So that Air India has brought back our own people, tourism friends from other countries. So that there are so many problems due to COVID-19, and we are facing the problems present time. So today we are only going to focus on the financial services. Our speaker is ready to deliver on this burning issues, that is financial issues. So that again, I am thankful to Sri Mr. Kumar Jyoti on the behalf of the College of Commerce, Art and Science. Thank you. Thank you, speakers, and thank you, Rasmiji, Nidulaji, or an entire organizing committee of College of Commerce, Art and Science. Thank you.
Thank you so much, sir. Thank you so much for your wonderful words, motivating all of us and also introducing the key points of international webinar. Before going further, I'd like to request you all, please mute yourselves. We are going to have a wonderful lecture, so we must concentrate. So I request it again. to mute yourself. Now, I have the pleasure of introducing a speaker of today, Mr. Kumar Jyoti. He has an engineering degree from Chennai and is an executive MBA from prestigious Warwick Business School, London. He is a highly professional senior program manager with financial services sector with over 15 years of experience. He has been in London since last 10 years. He has worked with multinational projects covering financial, regulatory, and transformational changes. Please join me in welcoming Mr. Kumar Jyoti, a renowned scholar who is going to enlighten us with details and intricacies about the impact of COVID-19 on financial services. Welcome, sir. The platform is now yours.
Thank you, Tapan sir and Rashmi ma'am, for those kind words. I'm really flattered to hear those words from you. Thank you very much, and thanks everyone for giving me this opportunity to talk about the impact of COVID-19 on financial services. Without further ado, can I share my screen to present the...
Yes. Yes, sir.
Thank you. Just give me 1 second. Yes.
फोटो ना दिखाया
हाँ रश्मि.
Can you all see my screen now? Rashmi ma'am?
Yes, we can see. Yes, sir. Yes.
Thank you. And Tapan sir has very nicely explained the introduction part of what I was trying to portray earlier, that as we all know, the COVID-19 pandemic is one of the biggest health crises that the world has faced in last 100 years. I believe last time in 1918, 1918, which was exactly 100 years ago, it was Spanish flu, which created similar kind of problem and pandemic across the globe. And at that time, it was said that almost 50 million people died as part of Spanish flu. Now, because of the advancement of the technologies into the health sector and other areas, hopefully we will be able to recover much quickly and without huge human loss as part of this crisis. But still, as we can all say very clearly, that this is the biggest crisis that the world has faced after World War II. And since its emergence in December in China, now it has spread across all continents except Antarctica, where we hardly have any human presence. So we can definitely say this crisis is more than just a health crisis. It is creating a lot of trouble in our socioeconomic status. It is stressing each and every countries where it's spreading, and it's leaving very, very deep scars on the economic and the socio structure of these countries, because it is creating a lot of job losses. It is creating hampering the income, and it is hampering the day-to-day life of every common man because of the issues that it is portraying on their lives. Right now, the World Health Organization is suggesting that we should be able to overcome this crisis in next 2 years, but still, unless we have a vaccine which can help us reduce this health crisis and which can fix this issue, I don't think we have a clear way of knowing when the normality will return. Now, even the small island nations dependent on tourism, they are hampering the most. As we all know, the tourism sector is impacted, and the services sector catering to all the tourism around restaurants, pubs, and every sector that feed themselves on the tourism is hampered the most in this pandemic crisis. We have all seen the empty hotels and deserted beaches across India and across the world. And the International Labour Organization is estimating that almost 200 million people will lose their job in 1 year of this crisis. That's a huge number, and that will create a lot of problem in the socio-economic status of all the countries that is trying to face this pandemic. Now, the World Bank has also projected that more than 110 billion remittances will decline this year. And as we all know, there is a lot of diaspora sending money back to India from earning abroad, working hard, and sending money to India to increase the economy and to increase the Indian economy and giving money back to their family. Definitely that will be hampered, and that will cause problems both for Indian economy and any other economy which rely on remittances for their livelihood. A number suggests that almost 800 million people will not be able to cater their basic needs due to this issue. Now, coming to the topic today, which is around financial services. Financial services is not aloof, and definitely it will be equally impacted by this pandemic. And the changes that this pandemic is forcing on every industry, because as Tapan sir rightly pointed, a lot of loans will be defaulted across the tourism and the services sector, across the aviation sector, because they are not generating any revenue in this pandemic. It will be very unwise to think that they will be able to sustain their loans on a regular basis in this pandemic. Now, a lot of world governments, including Indian government, have tried to help the mid and the MSMEs, the small and medium sector industries, to help them with government grants, with loans coming from financial services to help in the shorter term. But as we all know, the more this lockdown and this environment will continue, I'm not sure how long the financial services and the governments will be able to help all the sectors to sustain this crisis. So we can only hope for the best, but we need to prepare for the worst. And as you have seen in last quarterly results, all the major banks across the world are keeping money aside as write-downs as part of this loan defaults that they are expecting in the coming quarters. So they have already starting to prepare for the worst situation that they can think of. Now, hopefully we should be able to recover more easily and quickly, and the situation will not be that worse, but that only future can tell what will be that situation. Moving on, one impact, or I can say a blessing in disguise, that has happened across the world, and especially in the financial services sector, is the digital revolution. And this webinar is clearly a very good example of that digital revolution, because I don't think before this pandemic happened, anyone was even thinking about hosting these sessions through webinar. Now, there used to be webinar sessions, but they were very few and rare. But now this pandemic has forced us to go into this digital mode, to communicate with each other, to listen to each other, and to share our views. So that is a very clear example how we are forced to move into a digital revolution as part of this pandemic. Now, the financial services sector was always ahead in the curve to utilize this technological platforms and utilize the digital revolution. And they used to give access for their employees and their way of communication to customers through these digital platforms. But after this COVID-19, they have been forced to utilize these platforms as much as possible. Because as you can clearly say, this helps us keep the social distancing. We don't need to be face to face with the customers, and even the large deals are happening through these digital platforms these days. So we can say it's definitely a good progress, and it is showing a way how we are going to work in future, where we don't need to be in the presence of someone to progress or to pursue our work on a day-to-day basis. We can utilize the digital platforms, and that's not helping just the financial services industry, but it's helping a lot of telecommunications, a lot of telehealth, where doctors are seeing patients remotely, where events are going virtual, and a lot of global events are happening on digital media platforms. A lot of remote learning, which I said again was, this webinar was a clear example. And a lot of companies, not just in the financial services sector, but every sector where the companies were averse of using the digital platforms, but they have been forced to use the digital platforms and go through the journey of digital revolution because of this pandemic. So many companies are using the advancement of the technological base to be competitive and survive in this pandemic environment. Again, another impact that we have all seen as part of this pandemic is the companies are being forced to anticipate and be forward-looking into the future. Earlier, in a normal scenario, which I don't think I'm even able to remember, which was prior to this pandemic, since we have been working from home or not going out for 5 months. In the normal scenarios, the companies were for future-looking or forward-looking, but only for next 2 or 3 quarters, where they used to give guidance and they used to work how the companies will survive in a normal economic and socio environment. But now, with this pandemic, even the company I work and every big financial services institution and every other industry is now forced to think for 5 years in the future, because they don't know what can happen tomorrow. If we face another pandemic, how we are able to face it. We need to increase or develop our base and platform on which the companies are surviving to be ready to face any challenges of the future. We need to create a productivity improvement and technological enablement so that we are ready for any challenge that this world can face us. Now, a very good example that we can see in India is how the different governments are utilizing, different central and state governments, are utilizing the telemedia or the long way communication with common people. Now, even I think the elections in Bihar are going virtual, where different parties are using telecommunication or digital platforms to reach out to the villages. So that is a a clear example of anticipating how people can work in tomorrow's world, because that's the way for the future. Now, another thing that this pandemic has forced us to think is our health problems, is focused more on health, where you need to connect to your customers on a regular basis, because this crisis has created a lot of mental crisis, a lot of mental issues across the world. Many people are now thinking about what is really important in their life. So every organization needs to connect to their customers and think of implementing programs and ways how they can improve their customer engagement, because now you are not just providing services, but you need to create a personal touch and rapport with your customers to keep them engaged. Another thing that we need to think for the future is to create a vibrant ecosystem and partnerships, because what this pandemic and crisis has taught us, that we cannot work in silos, and any companies cannot flourish just by thinking about themselves. You need to work with all the business and everyone around you, because only if the whole economy and the environment flourishes, your own company will flourish. You need to create a vibrant ecosystem where you are engaging non-traditional ways to create new value propositions. So all this are kind of a forced way of thinking that all organizations are now ready to engage, which was not really the case before this crisis happened. Another further point which is linked to this previous point of creating partnership is embedding into the social responsibility. Now, we have seen definitely as part of this crisis, all the big companies which are able to flourish because of their digital ways or because of their tech-enabled environments, they are thinking of the social responsibility and giving back to the society, because they also understand the society needs to survive to recover from the depression that we are seeing in the society, or the recession that is looming all across the world. For the recession to come back, there needs to be a social responsibility that all the companies needs to do on a regular basis. Earlier, it was more of a good deed or a good thing that used to happen from only certain few companies, but now we have seen a lot of philanthropists or a lot of companies are getting engaged in the social responsibility, and they are helping or trying to help each and everyone around them in the socio-economic crisis that everyone is facing. The last point where you definitely need to anticipate the coming tomorrow or the coming future that you are going to face is the risk management and the agility that the companies need to embed in themselves. And that's where the earlier point that I was making around looking into the future for next 5 years and be able to mitigate and manage all the risks that your company, your sector, or your whole economy can face. And you need to be ready with all those factors and ways how to mitigate and manage these risks, how to deal with sudden shocks and the unexpected risk like this pandemic has forced on us. So in essence, I think this crisis is teaching us in a lot many ways, which in our earlier environment, we were not that focused on, but definitely these ways of keeping yourself ready for the coming future is a good thing, or a light in the tunnel for our coming world. Now, in the next two slides, I'll focus more on how the financial services have been impacted and how the banks and the insurance industry are transforming themselves in this environment. So, especially talking about the banks, the social distancing restrictions that has been, I think, put in place in every single country in one form or the other has created a lot of trouble for banks, because one, the banks have been kept in the key sectors or the special areas which are needed for the day-to-day functioning of the society. So the banks needs to be open in every single country of the world, because if we close the banks, it will create a social chaos, and people, I don't know what way they will be able to get the money for their day-to-day needs. So definitely you need to keep the banks open, but you need a lot more office space in your banks to maintain those social distancing norms. So the banks are transforming themselves in very innovative ways, where they are creating touchless automated machines who can utilize latest technologies of reading face recognition, facial recognitions, or if you are using your PIN code, your codes, or your hand touch recognitions to go through those automated machines, still that is reducing the customer interaction between the bank officials and the people who wants to deal with the bank on a day-to-day basis. So many banks of the world are trying to utilize new ways of transforming themselves. As of today, as we don't know what is the final cure for this pandemic in the sight, this crisis also raises the financial health, safety, and the employee well-being of all the banks that are functioning on a daily basis, even in this crisis. Now, I think I am in a lucky position, because I'm able to work from home and I don't need to commute on a daily basis to my office space. But the bank officials, they do need to commute even in this environment, and definitely that commute and the social interaction poses a huge risk on their health and safety. So the banks have started to think in that mode, as they are facing more risk for their employees in this pandemic era. So I have added an excerpt from EY Global Business and Capital Markets leader that CFOs are paying particular attention to the employment-related costs during this period. They know they may have to enhance the wellness, mental health, and learning and development budgets for the coming future, because of the risk this pandemic poses on the employee well-beings. They definitely need to increase their spend on the employee wellness, because as you can see, more people can suffer and become ill if they are interacting more with the people, and the banks are clearly a good example where our bank employees are interacting with customers on a daily basis. So definitely it poses a huge risk on their health and safety well-being. So in that way, the banks are transforming and changing themselves. At the same time, returning to office, banks must also coordinate the reopening of local branches in the areas where the banks have done some closures. And that is because the medium and small and medium sector businesses are facing a lot of crisis, and they need to keep the local branches open to help them with their day-to-day needs through small and medium-sized loans, which are now in a lot many countries funded or guaranteed by governments. I can give you a clear example here in UK. Almost £3 billion in government grants have been given to small and medium sector industries for them to survive in this pandemic, and these are 100% guaranteed loans by the government with very flexible terms. So everyone is understanding that our banks needs to function in this pandemic, and that's how the banks are transforming themselves. Also, a very rapid improvement that we have seen are from the new players in the banking industry. I think even India is going into the same direction, where many banks are now functioning on a digital basis, where you don't see any branch-based banking, but everything is on the touch of your hand tapes by your phone. Like many banks are coming up with account opening and customer verification through smartphones, and you can manage all your money digitally and manage all your connections digitally through the smart banking. So the new players in the banking industry, like the Paytm, the Beam, UPI, and the new ways of digital banking is helping us maintaining the social restrictions and forcing us to go towards the digital channels and the payment methods, and keeping us away from the physical instruments such as checks and cash. So definitely a push by the Indian government on these digital methods is helping in a great way during this pandemic crisis. So in essence, I can say the banks are definitely transforming themselves and keeping themselves ready for the future, and helping us in this environment by providing new ways of utilizing our digital channels and payment methods. Moving to the next big industry, which is helping customers in this pandemic environment, is the insurance industry. Now, a clear example of the COVID-19 outbreak in this unprecedented modern times is the significant challenge that UK economy and insurance industry is facing. Now, as you all know, UK is one of the centers of the niche insurance that is provided throughout the world and throughout the globe. So the insurance industry here in UK has worked hard to serve its customers, to manage a smooth transition of home working with minimal disruption to customer experience. So clearly, the UK insurance industry is showing a path for the insurance industries of the world, because it is serving different employers and multiple people in the range of 300,000 or 500,000 across different jobs and different towns, 150 different towns here in UK. And the insurance industries have come up with creation of 10 billion resource fund with the government to help the medium and small sector industries which are facing bankruptcy. So they are helping small sectors with their trade credits and with their day-to-day cash flow worries by providing insurance and providing funds on a critical basis with the help of the government. Many insurance industries in the motor sector where they provide have paid back the premium back to the customers because they are not using their cars a lot during this pandemic, and the cars are staying at home. So the insurance industries are reducing the premium or returning the premium back to the customers in this crisis situation. Now, obviously, that is a very small amount of help, but we can all agree that every small help in this environment is helping that single customer on the ground and helping the society and the economy in a big way if you combine all the help that these industries are providing. So as I can say, as I told you earlier, the 10 billion reinsurance agreement with the government to support trade credit is showing us the essential signs to supporting the supply chains and the reopening of the economy. If we see a cure later in the year, that will be a much needed support for these small and medium scale industries. I think the Indian government needs to think on the same lines, and the insurance sector needs to come together to provide similar kind of grants to these small scale industries, because in insurance, as you can see, it's not a loan, but you can return these grants with small premiums over a larger amounts of time, because that's how the insurance industry works. So again, that will be a good way and path forward to sustain and manage our small scale industries, which are a key for the economic recovery. As we all know, as the lockdown restrictions are eased and businesses start going back to work, insurers are also working with their business customers to support a safely return to the workplace, and they are providing specific COVID-19 workplace insurance, where they are providing certificates to companies that they comply the government standards of social distancing, and they have changed their infrastructure in a way which is less risky for the workers to come back and work in the offices. So the insurance industry is also changing themselves and continuing to support their customers with the government advice as the situation develops. So in the end, what I want to focus on is, yes, the banking and the insurance industry is changing itself to survive and helping customers and the society as much as possible. But at the same time, we all know that there is a great recession, economic recession that we are seeing across the world. And if you have seen the recent quarter results by the major companies of the world, and including India, I can say that barring the few in the technological sector like the Googles, Amazon, and the Microsoft, this recession has impacted every single industry, and especially the services and the tourism sector and the aviation sector. So many companies are laying off people, are letting go people, are reducing their forecast guidance of economic recovery for the coming 1 and 2 years. And it's evident that the revenue and the net profit of every single industry, barring few, as I said earlier, will be impacted by this recession. So here I'm presenting you an excerpt from CII India, where they have gone to the CFOs and the different respondents from medium and big sector industries of India. And they have asked them questions, especially around the impact of revenue growth and the impact of net profit across the 2 quarters of 2020. And as you can clearly see, as part of this pandemic, both the top line and the bottom line will be impacted by more than -10% for the top line growth and -5% for the bottom line growth. And everyone is prepping themselves for a net decline in their profit for financial year 2020, as well as some parts of, or the 2 quarters of 2021, because no industry can work in silo, and due to the layoffs and the reduction in the income of the common people, it is impacting the overall growth trajectory of every single industry within the Indian GDP. So I believe, as I explained earlier, the ways how banks and insurance industries, and especially the whole of financial sector, needs to come together to help our other sectors and the industries to overcome this clear decline of top line and bottom line that they are expecting in the coming quarters. And the governments needs to come together to provide as much grants as possible in whatever way they can think of, either by direct transfers to the common man so that the people can spend money, and that spurs economic growth and economic recovery, or by grants to small, medium, and large sector companies so that they survive the lockdown restrictions and recover themselves back when we ease down these restrictions and when we come back to the pre-COVID era. Those are clearly the well-defined ways which we can think of to survive this pandemic. At the same time, I suggest all the governments, and especially the Indian government, to increase their spend on the health infrastructure, because I think it's evident how fragile our health infrastructure is, especially in the 2-tier and 3-tier cities, where we have seen a lot of crisis due to the problems that the local hospitals are facing. So definitely the government needs to increase their spend on the health sector to be ready for any future crisis or health pandemic that we can definitely say is not uncertain. With this, I close my presentation and I am open to take any questions.
Thank
Thank
you.
you.
Thank you, Mr. Kumar Jyoti. Now you can stop screen sharing. Yes, thank you. It was please mute yourself, please. It was a very informative and excellent presentation. We all are enlightened with your in-depth analysis. Now, I invite Professor Mridula Kumari, Department of Economics, College of Commerce, Arts and Science, Patna, to give her observations of this session. Mridula, please.
Yeah, thank you. Thank you, Rashmi. Namaskar to everyone. First of all, let me apologize to the entire audience because I am not an expert in financial matters or financial services, anything. So it's just a duty to give an observation and what I have learned from Mr. Jyoti just now. So I'm going to take only 2 to 3 minutes of yours to give my observation, what I have learned. First of all, Mr. Jyoti, congratulations and thank you for your well-knit, well-articulated lecture. Mr. Jyoti has went through the impact of what this pandemic has made on entire economy, not only entire economy, entire society, everywhere, and more importantly, on the entire financial sector. He has discussed in detail about the impact of COVID-19 on how it has impacted the job sector, how uncertainty has came into it. Job loss is one important factor, one important impact which this COVID has made on the entire economy. Due to this, there are vast decrease or decline in remittances. India and third world countries are worst affected. Even entire world has been affected, but India, since it is a developing economy and poverty is very rampant here, so it has been affected more. It has also created so many troubles in socio-economic status. Yes. Yes, anyone? Okay.
No, it's okay. Continue.
Okay. So many people, 200 million people here, as he has said, 200 million people has lost jobs, and data is maybe some more people have lost jobs, but since data is saying that 200 million people has lost their jobs, but it has also brought some good things to the economy or to the financial sector. To survive, companies have a digital revolution. It is true that it has brought a digital revolution. और डिजिटल रिवॉल्यूशन का सबसे बड़ा इम्पैक्ट हम लोग देख रहे हैं कि व्हाट वी आर डूइंग हियर, वी आर इंटरैक्टिंग विद ईच अदर सिटिंग इन आवर होम्स. So work from home facility, technology development and remote learning, so virtual events and telehealth facilities, all these things have been facilitated or developed. But the question remains here that what is the reach of technology to rural areas? क्या ग्रामीण क्षेत्रों में एक बड़ा सेक्टर, लास्ट सेक्टर ऑफ आवर इकोनॉमी इज अ रूरल सेक्टर, और क्या वहां तक ये सारी चीजों का रीच है? क्योंकि हमारे बहुत सारे स्टूडेंट्स हैं, वी आर नॉट एबल टू कॉन्टैक्ट विद अस. who are not able to join our online classes. The question remains here. तो डिजिटल रिवॉल्यूशन का कितना बेनिफिट लोगों को मिल पा रहा है सोसाइटी में, कितना, हाउ judiciously it has been distributed, this benefit. The question remains here. Another point which he has discussed, certain ways to survive. Companies has to anticipate tomorrow. Yes. Productivity improvement is one important point. He has also discussed about the ways companies are doing to reconnect with customers. Some more creation of new partnerships are there. सोशल रिस्पॉन्सिबिलिटी की बात इन्होंने की है. सोशल रिस्पॉन्सिबिलिटी खास करके इन्वायरमेंट और अदर सोशल इश्यूज पे कंपनी जो है वो काफी आगे आ रही हैं. और रिस्क मैनेजमेंट, यस, हियर इज दिस इज द इम्पोर्टेंट पॉइंट कि अभी जो सिचुएशन आया और जिस सिचुएशन में खास करके हमारे जो फिनेंशियल सर्विसेज आ गए, उसमें ये जरूरी है कि उनको अपने तरीके से अब रिस्क मैनेजमेंट के लिए अपने आप को रेडी करना, सो दैट दे कैन डील विद द सडन शॉक्स इन फ्यूचर. वर्चुअल इलेक्शनियरिंग बिहार में, यस, इट्स ये कहीं ना कहीं इस पैंडेमिक की वजह से ये जो हमारा डिजिटल रिवॉल्यूशन है, इसका एक इम्पैक्ट शायद हम लोग को बिहार इलेक्शंस में देखने को मिलेगा. लेकिन हाउ इट इज गोइंग टू enhance the cost of electioneering, the question remains here. Another point he has taken is banks transformation to adapt to new situation. Yes, this is very true that banks are transforming, but to maintain social distancing, there are more office space is required. Yes, it is true that more office space is required. But since banks in tier 2 cities, tier 3 cities, and in rural areas are working in a very small, working from a very small space, so how they are going to tackle this problem of social distancing when they are facing so much space constraint itself? Yes, some innovations are also being done, and some new players like payment banks have already come. In fact, they have already come before this pandemic, but UPI transactions has increased during this period. It is true. At the time of demonetization also, UPI transactions has increased. And now this time also it is increasing. And it is a very good sign for the economy. But one question, there are some security concerns. How the customer, the innocent customer who knows nothing, is going to be protected from those Jamtara boys? So here this question remains to be answered. And insurance industry is expanding. Role of insurance industry is very important, and it is expanding in this time of pandemic. Specific COVID-19 insurance, some companies are providing specific COVID-19 insurance. It's true, but premium increase will lead to keep some of the or a major section of the society out of its reach.
Yes.
Another thing is during COVID problem, in some of the area in Patna also, people who were suffering from it, insurance companies did not cover the pandemic deaths or certain diseases during this period. This has created certain distrust among people for these insurance companies. So how this distrust is going to be eliminated? So this is a question. It was a very enlightening lecture, and I have again thank Jyoti ji for this enlightening lecture. Thank you. Over to you, Rashmi.
आप चाहती हैं मैं कुछ आपने जो सवाल पूछे आपने you have asked very pertinent questions.
हाँ, तो ये क्वेश्चन ऑडियंस के लिए सर. What I thought. Yeah.
क्योंकि नहीं जो आपने सबसे पहला सवाल पूछा कि how the digital revolution can reach the least impacted or the most impacted corner of the society जो कि हमारे गांव के लोग हैं. I think definitely यहाँ गवर्नमेंट को आगे आना होगा. We have to rely on the government in conjunction with all the big private sector companies, ताकि at least यहाँ पे we have seen a lot of NGOs are giving laptops to the lower income people so that they can do remote learning. They can stay at home and learn from the schools in a digital way. I think similar cheese or similar ways we need to work out to provide a laptop on the Gram Panchayat level, or I think it's already happening. Already internet or fiber optic cable is reaching to every Gram Panchayat or every parts of Indian society, but definitely उसमें काफी काम करने की जरूरत है और यहाँ definitely government को आगे आना होगा ताकि अगर ऐसा environment pursue करता है तो in that case they are able to help everyone in the society and no one is left out.
Okay.
दूसरा आपका क्वेश्चन इंश्योरेंस इंडस्ट्री और खासकर चूंकि मैं इंश्योरेंस इंडस्ट्री में काम कर रहा हूँ, मेरा मेजर एक्सपर्टीज इंश्योरेंस ही है पिछले 15 साल से. I totally agree. There is distrust and trade credit issues में यहाँ के इंश्योरेंस कंपनीज पे भी काफी क्वेश्चंस उठ रहे हैं क्योंकि a lot many policies didn't cover pandemic. आप चूंकि अगर आप पैंडेमिक इंश्योरेंस लेंगे तो आपका प्रीमियम बढ़ जाता है. तो बहुत सारी कंपनीज और बहुत सारी क्या 90-95% ऑफ द कंपनीज पैंडेमिक इंश्योरेंस लेके नहीं रखी थी क्योंकि हम लोग जानते हैं ये 100 साल में एक बार हुआ है, ऐसा हमेशा होता नहीं है. तो किसी ने इसके बारे में सोचा नहीं था और ना ही इसके लिए रेडी थे. तो चूंकि पैंडेमिक इंश्योरेंस बहुत सारी कंपनीज ने नहीं लिया था, डेफिनेटली they were not able to fulfill the claims in this pandemic. But how the government is trying to overcome this is, in this country government has created that 10 billion resource fund to even help those companies जिन्होंने पैंडेमिक इंश्योरेंस नहीं लिया था. और यहाँ पे गवर्नमेंट इंश्योरेंस कंपनीज का साथ दे रही हैं. अदरवाइज द प्रॉब्लम इज कि अगर इंश्योरेंस कंपनीज सारे क्लेम्स को फुलफिल करने लगे तो उनका खुद का सर्वाइवल इन क्वेश्चन में आ जाएगा. तो ये इसको दोनों तरफ से देखने की चीज है कि यहाँ पे इंश्योरेंस कंपनीज डेफिनेटली वी नीड टू प्रोवाइड सपोर्ट to the customers who are impacted, but it should be a collaboration or the joint exercise between the government and the insurance industry ताकि हर कोई इस environment में survive कर सके.
Thank you, sir. Thank you, Mridula, for your excellent and keen observation of the whole session. Now I declare this session to be open for all the participants. If anyone wants, they can switch on their audio and video and ask their questions directly. Otherwise, I would be taking up questions from the chat box.
Ma'am, there is a question, ma'am.
Yes, Saurabh, come on. You just
Hi, sir.
ask your question to the speaker.
Yes, sir. This is Saurabh, sir, a student of economics second year, sir. My question is, sir, regarding the prospect of pandemic, the greatest financial concern we are observing is liquidity stagnation. So, sir, the question is how government should focus on rechannelize the liquidation in the economy, because the whole scenario has changed now, sir. So that's my question, sir.
That's a very good question, Saurabh. I definitely agree that in the Indian environment, the liquidity problem is a crisis right now. And I think it's not a crisis which is created only by this pandemic. We had a liquidity issue even before the pandemic started, because of how the Indian banks are currently going through the NPA crisis and how they are clearing their books for all the loans for last 10-15 years, which are now NPAs and which they are writing off from their books. So that has created kind of a problem or an issue on the liquidity that the banks avail as part of giving loans and giving funds to the rest of the industry. But to your answer, I think the government is stepping in. They have went ahead and given some grants from their treasury. And I believe more than government, the RBI needs to help the banks to increase their liquidity. And they are doing it by reducing the repo rates and the reverse repo rates to provide more liquidity to the banks to utilize in this pandemic environment. However, I think we need to change, or we need to give some support and guarantee from the government that the banks should be given freedom to go ahead and start giving the liquidity back into the industry, and not worry about NPAs a lot, because I think right now the NPA crisis is looming in the minds of every single bank manager, and they are very hesitant to avail the liquidity to anyone or everyone who needs it. Hopefully I answers your question.
Yes, sir. Thank you, sir.
There is a question in the chat box from Professor Rakesh Kumar Singh, Muzaffarpur. What is the impact of COVID-19 on the non-institutional source of finance in rural India?
In my view, definitely there is a huge impact, because the rural sector is especially the non-institutional source of finance in the rural sector is dependent on face-to-face interaction, क्योंकि वो हर कोई वैसे ही काम करता है रूरल सेक्टर में कि उन्हें अपने सामान को ले जाके कस्टमर को बेचना है, उन्हें वैसे ही पैसा मिलता है, and that's how they survive on a day-to-day basis. So especially during the lockdown period, where I think almost a curfew was imposed on almost every part of the society, at that time the impact was huge. We have seen the crisis of migrant workers, which is a clear example, where they were not able to feed themselves and they were away from their homes. So definitely the impact was huge, and I think a lot of thought process needs to go into the policy making of the government to especially reduce the impact on this sector in the rural India if they are deciding on any lockdown or any restrictions, क्योंकि वो sector totally depend करता है face to face interaction का, वहाँ पे कोई digital medium और कोई दूसरा तरीका काम नहीं कर सकता है.
Thank you, sir. There is one more question from Mopia Ghosh William. What is the consequences when loan taken cannot be paid off due to layoff in many organizations?
Very good question. I think I touched upon this जब मैं NPA वाले question को answer कर रहा था, क्योंकि obviously it's a conundrum. It's a catch-22 situation जहाँ पे एक side आपको लोन देना चाहिए क्योंकि लोन के बेसिस पे ही लोग survive कर पाएंगे, and at the same time what you should do or what you can do if that person is laid off and cannot repay the loan. तो यहाँ पे again बहुत सारे options तो नहीं है, but the main option we can go ahead with is some government guarantees or government funds helping the banks. That at least I can give you an example in this country that government has guaranteed 100% loans to medium and small scale industries up to 50,000 pounds, which is around 45-50 lakhs rupees for small scale industries under 50 people, and up to 2.5 crores, 2.5 million loans, 100% guaranteed by government with a very flexible term of 2.5% and up to 6 years return period in this pandemic. So definitely something similar needs to be thought through. Now, I agree it is more achievable in a developed country with less number of industries, but in a developing country like India, providing 100% guarantee by government is not feasible, but still some guarantee or a little, even 50% or some level of guarantee from the government will help or will give the banks option to give these loans to the people who are in need. And obviously that way they should be able to recover some part of the money. So the government needs to think through and come up with policy decisions how they can help in this scenario.
Thank you.
Ma'am, may I come in?
Can I ask one question?
Rasmini, one question.
Yes. You can. Sir, Santosh sir, Professor
Yes.
Santosh, you can ask.
Yes. Recently, Government of India has announced a huge package for liquidity of MSMEs. But about 85% of MSMEs operating in India do not have exposure to instruments like formal banking, and they are still deprived of government liquidity packages. I don't see any motivation of government for inclusion of such deprived MSMEs in the pipeline of benefit transfer. Don't you see that this entire package was totally political?
Yes and no. Definitely there was a political angle around this package that was given by the government. But at the same time, if we go by the government numbers, they have done a lot of direct benefit transfers to the lowest level of people who requires this package the most. Even if it has reached to the numbers which are given by the government, I think it's a good start. At the same time, to your question around MSME is not having access to the banking industry, I think a lot of work has been done in last few years by the government to open the banks to every single person. And I'm not sure how much that 85% of MSMEs not having access to formal banking industry is correct. But definitely more work needs to be done in this area. And again, it's a challenge for the government to provide the funds to the people who are in need for these funds the most as part of the package. But as we all say, it's about the execution of the policy initiative. The success depends on how well that policy or that funding was executed by the government machinery. If you execute it well, the success lies there, but we have all seen most of the good initiatives by the government fail in their execution. So I see the similar problems in this initiative as well.
Thank you, sir.
Rashmi ji,
Now,
can I ask
Dr. Sanjay Pandey.
just one?
Are you there?
Hello.
Yeah.
Hello, am I audible?
Yes.
First of all, thank you, Mr. Jyoti, for this very informative lecture. Just one clarification. You said that now companies are planning, they are long-term planning. Just you mentioned that now they are planning for 5 years. But in this pandemic period, now the future has become more uncertain. No one knows what course of action or what course this pandemic will take, whether it will end immediately or whether it will continue for a long time. Then how in this uncertain terms company can plan for future, because where future is uncertain?
Very good question. The way the financial services work, they have their risk model, which they affected by a lot of factors from the economy, from the status, and from the risk factors that the companies face for the coming quarters and for next few years. So how the companies adapt themselves when they plan for 5 years ahead is they increase the surplus or the buffer that is needed as part of these risk models, and they do or they pursue themselves through some stress tests with the parameters of having normal good environment scenario or worst case scenario in these models, and then by increasing the surplus in your buffer, you keep yourself ready for any future pandemics. And that's what the financial services sector is doing. They are increasing surplus or buffer. They are stopping any big investments in some industrial projects, because they can survive without those investments for some time. They are increasing their surplus in future ready.
Thank you. Thank you, Mr. Jyoti. One more question is from Mopia Gold. What are the sudden shocks which financial services will face?
The most pertinent and clear example of the sudden shock that will come or that is coming is from the tourism and aviation sector. That's obvious that every single banking and insurance industry is keeping money aside for the sorts that they are expecting from these two sectors. At the same time, you can see a lot of talks or issues coming from the property market, especially on the commercial side, on the commercial property environment, because a lot many shops or malls will close down if they are not surviving this pandemic, and they will be sending sorts of financial industries around loans back property owners. So that's another that they are expecting, and they are prepping themselves for these kind of shocks, as I said, by increasing the buffers or putting themselves through more stress tests.
Thank you.
Thank you.
Such a nice explanation of the question.
Ma'am, excuse me, ma'am. I too have a question, ma'am.
Yes, Rishabh?
Ma'am, yes, ma'am. I too have a question.
Okay, you can.
Good noon, sir. This is Rishabh.
Hi, Rishabh.
Sir, as per the current situation, as we're seeing that we all are discussing on how to get recover either on a long run goal or a short run goal, and we all are much relied on the vaccine which is coming. Sir, shouldn't we proceed in a bit more precautionary way that if there will be any second spike of the COVID, as we have already seen in the case of New Zealand. So, sir, if something like that happens with a country like us, India, or say UK, US, I mean a more populated country, then it's gonna be too expensive, or say, yeah, too more many causes. I mean more losses to us. So, sir, in that case, what will be the precautionary measure for us or the financial sectors?
That's a very good question. Now, I know every single country is prepping for the second wave, but at the same time, you can understand that all the countries and all our medical fraternity has gone through and experienced the first wave, and we are definitely more prepared on all fronts to tackle the second wave than in the first time during March period. So a lot of examples are coming. You gave a very good example. And there is another example in Spain, Italy, and Germany, where there have been recent spikes after easing of the lockdown. But now, when they are analyzing these spikes further, the impact is not as huge as we have seen in the first spike. So the companies are definitely preparing for lockdown restrictions. I don't think we need to go that far of complete lockdown as we have seen in the first spike, because definitely we are more prepared, we are more experienced. The health professionals are more experienced, as well as the common people also understand the causes and the impact of COVID-19. So, in my view, I don't see a similar huge spike coming from anywhere in the world unless the government unless the government is opening every single program. As long as they are opening, governments are opening, I don't see the huge impact of a second spike.
Thank you, sir.
Hello, Kali.
All participants, please.
Participants,
I request you to please mute yourself. Only unmute when you want to ask question. I request you again and again, please. Mute yourself when you want to ask question. Then only unmute yourself. Yes, Anand Kumar, please mute yourself. So that we can move further, please. I request again and again. Who is there? Mosam? Who is there? I will remove. Now, anyone who want to ask the question to the speaker?
May I come in?
Who is there?
Ma'am, Mohammed Zikrullah Khan from GD College.
Okay.
Okay, thank you, Jyoti. You have given good explanations. My question is that India is facing problem of the NPA for quite long of time. And what is the way ahead for Indian central bankers? Or do you have any living experience from the different countries that if they are having persistent problem of NPA, how to go about it? Thank you.
Thanks for the question. NPA, many economists have different view of how to tackle the NPAs in any environment or any situation facing different countries. But in my view, the way RBI and the central bank has pursued with the banks around auditing their books and asking them to open and like be transparent around all the NPAs that they are facing. I believe that that is the best approach, and that's what is followed in any of the developed countries, i.e. US, UK, or Europe. You cannot keep a loan open on your books if you have not got repayments made for last few quarters. That is the basic principle that all the banks follow. And I think the Indian banking industry is following the same norm now, that they need to be transparent and move a loan or a funding from their normal books to the NPA side as soon as they are not getting payments for few quarters. At the same time, I think the bankruptcy laws, which has now been started, I'll say, because earlier there was hardly any bankruptcy law for the industries to file any bankruptcy within India. But now a lot of work has been done on the bankruptcy laws, and that has given ammunitions to Indian banking industry to at least reduce a chunk or a part of their NPAs and bring some money back into their books of any loans or any recoveries that they want to make. So in my view, the path that the central bank and the Indian banking industry is following is the correct path. We just need to give them time to follow this suit and come up with a more transparent way of loans and funding in a good environment.
Thank you, sir. Thank you. Anyone?
Yeah, ma'am. Myself, Amit Kumar.
Okay, Amit, come on.
So I have a question that India has announced that India is making, after 5 years, a $5 trillion economy. Is the pandemic of COVID-19 and the relation and a bad relation with China is sufficient to any opportunity for India to making $5 trillion after 5 years till 2015 financial year? That's my question, sir.
Till 2025. And definitely this pandemic has impacted India in their ambitious aim of becoming a 5 trillion economy, as well as bad relations with China. Those were two very good points that you raised. I think it will depend on how the government is making the policy decisions once the recovery starts, and how good the internal economic spur of spending and the internal growth helps the economy to recover, because India is a very big market and Indian economy can recover a lot just by increasing their internal spend, and that will easily add 2 to 3% of GDP increase on a quarterly basis just by their internal domestic spend, just by the increase of their internal domestic spend. So in my view, all will rely on how well the government is helping the public and private sector in their policy decisions once we overcome this pandemic. I'm not sure whether 5 trillion will be achievable by 2025, but a lot will depend on what is the domestic and the international scenario in coming 4 or 5 years. And that will basically decide where the Indian economy is.
Thank you.
Thank you, sir. Anyone who wants to ask question? I think there is no question at all. So we should move further. Now, open session is over. As we come to the end of this very enlightening lecture, followed by the overwhelming response of the participants in the interactive session, we now come to the ceremonial ritual of vote of thanks, which is being given by none other than our dynamic NAC coordinator, Professor Santosh Kumar, Department of Physics. Sir, please.
Thank you, Rashmi ji. Our esteemed institution, College of Commerce, Arts and Science, Patna, which is a NAC re-accredited Grade A college, has always been a frontier in coming up with the contemporary global and national issues, intellectually pondering over them and culminating with novel ideas for being brought to the notice of the policy makers. The COVID-19 pandemic world over and its consequences in all walks of life, especially on national economy, has invited concerns, and today's discussion in the form of a symposia was to address and discuss the impact of COVID-19 in the perspective of financial services. I express sincere gratitude on behalf of the entire college family to Mr. Kumar Jyoti, who spared his valuable time and kindly consented to enlighten us with his scholarly views on this very pertinent issue. Thank you very much, Mr. Kumar Jyoti ji. Me as IQAC and NAC coordinator, the Department of Economics of our college, and all the faculty members of college over here are beholden to our respected and intellectually vibrant principal, Professor Tapan Kumar Shandilya, who always inspires us for these kinds of academic endeavors. Thank you, sir. The head of the Department of Economics, Professor Rashmi Akholi, deserves all accolades for her vibrance and for being always enthusiastic to come forward for contributing to the academic excellence of college. I like to express my gratitude to all the faculty members of Department of Economics, Professor Umesh Prasad.
Your voice is not clear, sir.
Why not clear?
Yes, now it's clear.
Okay, maybe this is a internet problem. I like to express my gratitude to all the faculty members of Department of Economics, Professor Umesh Prasad ji, Professor Praveen Kumar ji, Dr. Ramesh Chaudhary ji, Dr. Mridula Kumari ji, Mr. Sanjay Kumar Pandey ji, Dr. Baikunt Rai ji, Dr. Vivek Kumar ji, Dr. Ken Yadav ji, for their active involvement not only in the program being organized by the Department of Economics, rather in all such programs of college. We are thankful to Professor Bindu Singh ji, HOD Zoology, Professor Saloni Kumar, former HOD English, for their self-propelled spirit, for meaningfully contributing to the fame and academic excellence of college, and especially in this program for their technical support, kind technical support. I can witness the valuable presence of a few other teachers of our college like Dr. Raghavendra Kishore, Professor Imtiaz Hassan, Professor Sunita Lal, Dr. KB Padmadev ji, and a few other teachers of different colleges like Professor Navendu Shekhar ji, Dr. Fazal Ahmad ji, Professor Nandini Mehta ji. I could see the presence of all the respected teachers in this program. I am beholden to all of them for sparing their valuable time to be a part of this program. I would like to thank all the faculty members of our college and other colleges, the scholarly persons from academia and otherwise whose names could not be individually acknowledged due to paucity of time, but I will just say that the entire college family is beholden to all of them for obliging us with their gracious presence. Lastly, but very significantly, I would like to say a big thanks to all our students who obliged us with their precious presence. Thank you all. Thank you very much.
Thank you, Professor Santosh Kumar ji.
Thank you, sir.
Now, with the permission of chair, I declare the session to be over. Thank you, participants. Thank you all.
Thank you, ma'am. Thank you, ma'am.
Thank you, ma'am.
So again, thank you, Jyoti Kumar
Thank
ji,
you, Rashmi.
to deliver.
Thank you, sir. Thank you, ma'am.
Jyoti ji.
Thank you
Jyoti
so
ji,
much.
many thanks to you.
It was a nice.
Yeah, thank you, ma'am.
of Commerce, Arts and Science.
Thank you, sir. Kumar ji, sir. Thanks, sir.
It was very much informative. Thank you so much.
Very,
We
very
enjoyed.
informative.
Yes, it
Very
was
enlightening.
Yeah. Thank you so much, Rashmi Di.
Thank you.
Thank you, Principal Sir, also. Thank you so much.
Thank you.
Thanks everyone. Thanks everyone. Thank you.